And joining me now is Kearabilwe Nonyana from Scope Prime Africa to give us his take on the market's activity. Thank you so much for your time, Kearabilwe. Nice to see you. Nice and warm there in the office. All right, well, something that is not warm, feeling the cold, is the rand today. It chased and quickly crossed that 18 rand level against the US dollar. Is there just too much risk priced in for the rand to hold the gains that we've seen over the past month or so?
I think so. I think the geopolitical risk in the system has taken the rand to where it is right now. As a liquid, very liquid emerging market currency, you'll see risk show first of all in the rand. I don't think there's anything particularly South Africa has done wrong. The rand remains very weak even at these levels. It's supposed to be trading a lot better than it has, and you've seen in those gains that we've seen over the past few months. I just think right now too much geopolitical risk in the rand and a lot of risk off trading.
Yeah, and I actually do note your point there that it's not that we've done anything wrong in South Africa. In fact, things have been relatively quiet. And when things are quiet, when there's no noise, that's when there are good news. And talking about good news, we did have the May inflation print coming in this morning, keeping steady at 2.8%. Good news as well. Anything to note there?
I mean, when would you have ever thought that we'd have lower inflation than the UK or Australia? And then
Yeah.
that speaks to the fact that there's really nothing more that South Africa has done. We have a bourse which is almost sitting at record levels because of a strong JSE. You have a bond market which is fairly stable, and then you have inflation which is really sitting where it is. And you've had an MPC who've kind of touted the fact that they want to keep inflation even below 3%. Do I agree with this? No, I just think that the economic environment is too weak for us to even think about that. But some of the reasons that I've listened to some of the deputy governors speak of is the fact that our borrowing costs over time will become lower if we structurally have a lower inflation target, which I think is not a bad thing looking at where the fiscal position of the South African government is.
Yeah, you spoke about that UK inflation for May, and of course, we got that. It was in line with market expectations at 3.4%. I mean, of course, this comes ahead of the Bank of England's decision tomorrow. What decision does this price in for the BOE?
I think they have a growth problem more than anything else. I think they're willing to accept high inflation for for an extended period of time in order to get that economy going. I always say, I mean, when I started off in the markets, there were a few companies in the UK which were amongst the best in the world, and what I'm speaking about is market capitalization. Right now, you probably can't even name one, and I think it's the lack of ingenuity in that economy, and it's just because they've left it to just never advanced technologically. And I think right now the BOE is doing their part where I think our SOP are doing too much. I think the BOE is doing their part in order to try and drive some growth into that economy.
Yeah, right. Well, while we're still on this topic of monetary policy, central banks coming out with their decisions, the Fed, if I'm correct, is coming out with its decision tonight at around 8 p.m. South African time. And of course, this amid economic uncertainty both in the US and also globally. What options does this put in the Fed's hands?
I think if you look at the data that's coming out of the US, we've seen quite resilient data. And I think what has been happening in the economy is just they've been front loading, businesses front loading just because of the tariffs. I don't think there's any weakness in the data that we've really seen in terms of what's really going on in the ground. But I think what's quite concerning for the Fed is just the rise in jobless claims as well as the housing data. And I think for me, it's just a matter of the fact that some companies are taking a wait and see approach, just like the Fed have done. And I think it will be those sort of themes that are going to come out of them. But I don't think that they should imminently react to the geopolitical risk which is showing itself right now, because I think they've got enough space for that economy for the world economy to show itself. And I think with the head that Jerome Powell has and then the rest of the people that sit with him, I think they're going to take a wait-and-see approach.
All right. Well, let's go into the company news that have come out on the JSE. Not a lot, but looking at Brait, the investment holding company, came out with its annual results today. Its net asset value climbing by 6%, and also looking at headline earnings that's swinging from a loss to a profit. Quite a significant year for the company, as it also did its recapitalization, including that rights issue. Just talk to me about the dynamics in the results. Of course, we know that they have quite a diversified portfolio of investee companies.
I think that that's the problem. I think, diversification sometimes for these group holding companies that does not come very cheaply, in the sense that all these businesses operate independently and operate in such diverse territories, as well as in diverse product ranges. And you can see it in the fact that the new look results are not looking great. It hasn't looked great, and they're still thinking about how do we get rid of this asset which is operating in an area such as the UK, which is not growing. Whereas you start to see the wellness brand like Vision Active, which makes up really the bulk of the valuation, about 62% when I looked this morning, which is really doing well in different territories. And essentially the repositioning of that group as a wellness brand, more than it just being gyms, has really capitalized for them. And I think you can start to see yesterday's in Premier Foods results presentation, you're starting to see that they're reducing debt, and that's exactly what also happened. So I think it's just that congruency in them trying to get the stable to be more resilient, and to have brands that I think that they can see have a future in the world economy.
All right. Before we get to the stock picks clips, Metrofile, I mean, I know that not a lot of people follow the company at this point, I guess, considering the fundamentals that have changed, but they issued a further cautionary announcement today, saying that they are having further discussions with the company that wants to acquire Metrofile. And I'm wondering, just considering the change in fundamentals and strategy that we have seen in Metrofile, if it has just made it a takeover target for a long time.
To be perfectly honest, I think when I started in the markets, I think we're going back into the themes of stuff that I thought would be companies which are 10 baggers. And I thought Metrofile had been in such a niche area that looking at where digitalization was going, especially for the bulk of operating businesses as well as the state, I thought that they would have really done very well. And it's in a position the way there is an opportunity for a takeover, just purely because they operate in such a niche space. But I think in terms of the fundamentals of the business have never really come where the market has started to rate it where I think it deserves to be rated. As you said, it's a very small counter, not really well covered, but I think it is one that I've always followed quite rightly, because I think it operates in a very niche sector, and I think there may be opportunities for it there.
All right. Well, Kearabilwe, before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
I'm choosing Premier. I think Premier on the surface seems to be a one-trick pony, just a bread maker. But I think the combination of the management and the franchise that they have offers a lot of value. I think share price has accelerated, but it hasn't quite captured the fact that they're quite dominant in the coastal areas with their bread, and they're now coming into the inland areas where they have a lower cost, higher quality bread, and that factory will be ready later on this year, this financial year for them. And I think that gives them a very solid platform that allows them to grow and even go look for other acquisitions. I don't think it's expensive yet. I think it's well run. I think it generates above market returns and has solid potential to come.
So my pick for today is going to be Valterra Platinum. In fact, the whole platinum sector generally, I think, would fit this box as well. We all know the kind of positive stories around platinum, especially in the past couple of weeks, the price rallying quite strongly. But I think there's two additional points to be added to that. I think a number of asset managers are underweight the kind of resource sector of platinum specifically. So I think a lot of money will be chasing these PGMs at these levels. And the second thing, I think specifically with Valterra, obviously this unbundling from Anglo American has been done in what the JSE calls a market cap neutral way, which means that they have not actually allowed the free float to float properly. So I think there's going to be an additional kind of upweighting, obviously, I think maybe in September, whenever it is, and that should also kind of increase the requirement, the holding requirement, if you can call that, for some asset managers. So I think there's still some legs in the Volterra Platinum story.
Well, Kearabilwe, interesting that Roy picked a Premier as we were talking about break. Anything to add there, seeming that, of course, it is the star of the show there?
To be perfectly honest, I think this goes back to the start of my career. Premier, one of my favorite portfolio managers, all mention his name, always used to say that one thing that Premier Foods has is good brand visibility. He says when you walk into a store, if you don't see your products on eye level, it's going to be very difficult to compete. And to be perfectly honest, Premier has such good brands. And in terms of margin integrity in food production, it's always difficult. But with Premier, they've been able to do that. I mean, you would have seen even the dividend was up about 23%, and their debt was reduced quite substantially in the year, which means it's quite heavily cash flow generative. And I think all around, for them to have the dividend payout ratio of about 30% of diluted EPS really stands well for investors. I think Premier is a good pick.
All right. What about Volterra? And is this calling out the bottom of the PGMs?
It's a bit difficult to do. I think they were just very lucky. And what I mean by that is that once we saw the Hong Kong and Chinese numbers showing that jewelry demand for platinum had increased 12% year on year in April, you started to see the price of PGMs going up, and specifically in palladium as well as platinum. But I think what as well has happened from South Africa being such a high platinum producing industries is that because the prices have been so depressed for so long, we've started to see a lot of supply get off the table, and they just reaches a breaking point for any price where 25% year on year has been taken out of the system from specifically South Africa. So that's really has buoyed the price of platinum to cross-weight highs. Do I really believe it is a turning around of that? It probably is not there yet, but I think right now the good thing about Volterra is that it has a great return on capital employed, as well as has some of the lowest cost producing platinum mines in any of the stables in South Africa. So do I think it's a good pick? I also think Volterra is a good pick.
Yeah, all right. Well, what is your pick for today, Kearabilwe?
I'm going with Sinopec, and why specifically is this geopolitical risk that has come? It's trading at about a 15.85 PE. What's quite interesting about the Chinese production is that we expected the peak to reach in 2027 of peak oil consumption, but it has been pushed out just purely because of the fact that the adoption of EVs has been great, but it hasn't reached that level. I think the only concern that I may have is because of the fact they do get some Iranian imports of oil, which are a lot cheaper than the market, but I think Sinopec has enough capacity to kind of close that demand gap.
All right. Well, thank you so much for your time and for your insights on what is moving investors' money at midday trade, Kearabilwe. That was Kearabilwe Nonyana from Scope Prime Africa.